Good morning, trading world. It is December 3rd, 2021. Got to get used to saying December. Time moves so fast now. Um, it is just after 8 a.m. on this Jobs Friday. So, very big news event at 8:30. Kind of listening and waiting in the background to see what brings with the job number. Things that I will be watching today. I'm keeping my eyes on market leaders. Apple, Nvidia, Tesla, of course the financials, Amazon, Google. If we're going to hold this rally, these market leaders have to continue to hold place and continue up from where they are. But if this rally fails, these are the places where you'll see the signs first. Now the path is laid out for a further flush down, but will it? How many more bears will be shaken out before we set lows for the month and get a real bounce to close the year? Even looking at things yesterday, I was waiting on the king resistance to get tested before I was willing to really go along with weakness and a flush back down. So today finds me in the same place, waiting for a test above 461, 462 before the possibility of resuming sell side activity. But we're getting close. Keep your eyes, if you're watching RSI, keep your eyes on the 4-hour chart to see when it hits strength and starts to come back out of that overbought territory is when we could possibly see some sell side activity start to resume. But some things kind of have me concerned because on the daily chart, if you look at that RSI, we're already down to an oversold level. So to me, it just says there's a limit to how much we can go down. I don't expect us to break down another, 100 points below the lows that we've already tested this past week. Because the daily is already down to a certain degree. However, if we continue this rally and the daily chart, picks up a little bit, that RSI, then it may be possible to kind of push down further. But it's hard for me to see us breaking down much further below the lows that we've already created with the daily being in its position. So I'm going to keep my eyes on that as well. Let's get to key support levels, support and resistance levels. Let me get those up for you for the day. Alright, starting with the resistance levels on the day. First resistance, Jack resistance level is going to be 458. Queen resistance level is going to be 460/461. King resistance level is going to be 463. Going back to support, the Jack support level is going to be 455. The Queen support level is going to be 454/453. King support level is going to be 449. Now, there's obviously going to have to be some news or something crazy with the jobs number to get us back headed this direction, this deep down to this 449. So keep that in mind. This is a news event day. So these are the levels to be aware of. I see this rally continue because they want to shake out a lot of the newfound bears. So be careful. Usually when I take positions like this, if I'm stepping out in front of a rally and I'm trying to take a short without a whole lot of confirmation, I usually do it in the form of a bear put spread. It just limits the loss, gives me a defined risk, and it's just easier to deal with. Let's get into the scenarios for the day. The first scenario that I have is a range day structure where we probably sink back down somewhere around this 454, 453 area, then push back up toward 460, 461, and pretty much chop around the entire day trying to figure out where we're going. But majority of just kind of chopping between these ranges and maybe pushing the boundary higher or lower towards the end of the day. I usually put probabilities with the scenarios, but the market is so irrational right now that the probabilities just, they don't add up, and it's not making any sense right now. So we get to these places, it's truly a 50-50 day. We could do anything, any one of the scenarios when the market gets this irrational, especially on a news event day. It only takes one spark to push us, in a direction or over the edge. So just be careful and keep that in mind on this news event day. And here we go with scenario number 2, which is what I like to call a Trange day, a rounded reversal day. Based on the job number, if they deem this good or whatever in the report coming, we could take off like a rocket towards any one of the resistance levels that we had, the key levels. Looking at 460, 461 being the primary area, and it's possible to get all the way up to 463. However, I doubt it, especially if it's going to be a Trange day. But we find a midday chop area around one of those resistance levels. And again, as always, you're looking for divergence. You're looking for volume to be dissipate or diverging from the actual move itself. You're looking for the indicators to be diverging. Even as we move sideways, the indicators should be moving down in a downtrend away from price action. What I was going to do is that your indicator, if you're using the MACD and we get to this sideways chop, as it's moving sideways, you should see this type of action here, and again this type of action on the volume as it diverges away from price action. And the key signal for this type of day, even the second, third bar at the open, if you're on a 5-minute chart, you should start to see this type of action with volume, especially with the bull volume if price action is rising. So that's scenario number 2. All right, the third scenario is going to be a trend up day structure. That's where we open gap up. There should be a significant gap up from yesterday's close, and off the open we kind of fade back into finding a support level either at or just before yesterday's close of 457.40. From that point, we'll see a little sideways action before reversing and taking off toward 460, 461 area, or whichever key support area we have flagged around that area. We stop and get our midday chop, and then the second half of the day we'll end with a choppy range before kind of fading into the close. So that is all of the scenarios that we should be prepared for today, or at least that I'll be prepared for. But we're in that type of market condition where anything can happen. Volatility is kind of backed off a good bit, but we're still up above 25 on the VIX. So with us being up above 25 on the VIX, you have to be prepared for everything. And this is the reason why I say you have to have risk-defined positions. You can't be in something open-ended where your risk is not defined. It's not set at a predetermined number. Because if it reverses or go against you, it could go a long way. These are those days that, can drain accounts. So you always want to be in a risk-defined position. That's pretty much it today. It just kind of feels like a lifeless day to me this morning as far as trade. Like, I'm not really feeling it much. So when I feel like that, I'll usually back away, or I'll look a lot more, or look for more confirmation before I actually jump, or just completely back away from the screen on days like this. So, but we all have our ways of dealing with certain things. If the feel is not there for you, don't force it, because those are days where you could really kind of get yourself into a hole by doing stuff that you wouldn't normally do, or if you're not feeling it. So a wise man once told me, when I first began trading, emotions play a very huge part in trading, and you have to have your emotions in check to a degree when you're trading, so that you don't get taken off on a tangent, or do things that you normally wouldn't do, because emotions will make you abandon your trade philosophy. So when I feel like this, or when I feel a certain way, those are days that I kind of back off. And that's where I'm at today. But I will be looking for the right setup. But as always, wishing you a successful day in trading. Have a great day.